Michael Burry was one of the best financial players, but since 2015, few people are aware of him. The Big Short, a 2015 Paramount film, enabled Michael to profit handsomely from a forecast. He benefited from the subprime mortgage crisis that affected the United States of America from 2007 to 2010. Although originally few people were convinced, Michael is now widely seen as having a significant influence on how the industry would develop in the years to come. Are the claims by Michael Burry about the collapse in 2022 true? Hey people, welcome back to our channel. In today's video, we will be looking at Michael Burry's prediction of the 2022 stock market. But before we start, make sure to subscribe to our channel, turn on the notifications, and most importantly, watch the video till the end. Let's get started. In the year 2000, Michael Burry launched Scion Capital, a hedge fund. He was regarded at the time as a knowledgeable and gifted value investor. The Vanguard Group managers and Joel Greenblatt. Naturally, all clients were much more eager after his first-year results were announced. When the S&P plummeted by roughly 12% in 2001, Scion witnessed returns of 55%. Then, after foreseeing the internet bubble, Michael distributed the earnings to his clients. By short-selling the most inflated tech stocks, Michael Burry was able to sell these profits. Being prosperous time and time again helped him establish his reputation as a talented investor. Sadly, when questioned about his predictions when the risk of a subprime mortgage revealed itself, this reputation was insufficient. He unexpectedly anticipated that the entire property market would crash in 2005. Several clients didn't believe him, despite the fact that he was a well-known investor. Michael was, however, proven correct in 2007, which solidified his reputation as a market authority. Michael only said, "The market is dancing on a knife's edge," in the middle of February 2021 because his investors refused to back him. A crash is unavoidable given the evidence of the S&P 500 index's increase. The general migration of assets from actively managed funds to passive index funds, which Michael Burry liked to refer as passive investing's IQ drain, is part of the problem, he claimed. New trends appear to be amplifying the risk as inexperienced investors rush to invest in the stock market. For instance, in less than 30 days, GameStop's share price increased from $20 to $483 before falling to $50. The most notable development is that Michael made $270 million in profit from GameStop. Nobody other than inexperienced traders have suddenly become more interested in call options. These call options might indeed yield a profit when used by experts. However, there is a great likelihood that these techniques could put you in danger and lead to unpleasant outcomes. According to Michael Burry, the increase in stock prices could occur within the following 12 months. It might begin with wildly inflated equities like Tesla, which Elon Musk owns. He uses the hashtag #TeslaSoufflé to refer to this particular stock. Michael made his market projections in no uncertain terms in the middle of February 2021 because investors are taking on unsupported risk. He claimed that the market is dancing on a knife's edge increases in the S&P 500 index that corresponds to levels of margin debt. These show that they are engaging in speculative trading with borrowed funds. Simply put, it is unsustainable and a crash is all but certain. Burry proposed that a widespread shift of assets from actively managed funds to passive index funds is a contributing factor in the problem. He referred to it as the IQ drain of passive investing. New day trading patterns have increased risk. Unsophisticated traders are entering the market and making bets based on recommendations from social media forums and so-called meme stocks. The most convincing illustration of this was GameStop, which in less than 30 days climbed from less than $20 per share to $483, then back down to approximately $50 per share. It's important to remember that Burry made $270 million from the GameStop roller coaster. Call options, which can be profitable when judiciously leveraged by knowledgeable traders, are of special interest to these same rookie traders. Unfortunately, the novice day traders who are adopting these tactics are purposefully taking high-risk positions with what seems to be a lack of consideration for possible outcomes. In the social media trading groups, hashtags like #BlowOffTop and #Caution to the Wind are frequently used. A correction is inevitable given the unjustified rise in stock values and, according to Burry, one is likely to occur within the next 12 months. It might begin with equities that are enormously overvalued, such as Tesla by Elon Musk, which Burry has shorted. His specific reference is to this stock. In addition to worries about overpriced stocks purchased on credit, Michael Burry has made his forecasts about inflation public, and he isn't the only one who is alarmed. Pent-up demand for products and services that have been unavailable due to the COVID problem may be combined with an infusion of cash into the market through suggested economic stimulus measures to produce the ideal environment for sudden, fast inflation. Burry mentions Germany after World War I, which experienced hyperinflation in 1923. Burry claims that the 1923 collapse was preceded by an 8-year buildup and draws parallels between the events of 2010 and 2021. In essence, he contends that with its modern monetary theory-based policies, the United States is imitating Germany increases, and the cost of labor and the cost of goods sold will result from the trillions of dollars in economic stimulus funding and the reopening of shuttered enterprises. And this can only lead to a painful, unimaginable level of inflation. Michael Burry predicts that the economy will collapse in 2022 based on this study. But he won't take the criticism no one is paying attention this time. Burry has widely disseminated his theory and always concluded the saying, "People say I didn't warn last time. I did, but nobody paid attention. I'm advising this time and still nobody pays attention. But I'll have the evidence that I did." He even went a step further and changed his social media handle to Cassandra, the name of a Greek mythological prophetess. The result of Cassandra's curse was a career of prophesying and pleading with people to pay attention, but never being believed. Focusing on tangible assets rather than cash is the key to securing your portfolio against inflation. Money becomes essentially worthless in a hyperinflationary scenario, so assets with intrinsic value or those unrelated to conventional currency are more likely to hold their value. Since there is no link between cryptocurrencies and traditional money, such as the US dollar, Bitcoin may be crucial in a scenario when the value of the US dollar declines. A few businesses have decided to diversify as a result of this separation by exchanging some of their cash for Bitcoin as an inflation hedge. If stocks aren't otherwise highly overvalued, they typically stay up with inflation. Another well-liked option as a hedge against inflation is gold. Since commodities and an ETF with a focus on commodities tend to move in tandem with inflation, some investors decided to include them in their portfolios. The iShares S&P GSCI Commodity Index Trust is a well-liked option if you choose to take this path. A careful diversification strategy with a variety of assets will ensure that you don't lose too much purchasing power in a hyperinflation scenario, like Michael Burry's predicted collapse in 2022. It may not be possible to completely protect your portfolio against the risk of inflation. With that, the video has come to an end. Let us know what you think in the comments section to help us expand our community and attract more people who share our interests and are eager to learn. Please hit that like button and subscribe if you thought the video was interesting. Till then, bye!